In chapter 2, the comic that I have up here is the first page of chapter 2, where it talks about Sarbanes-Oxley. Who went to jail based on the Sarbanes-Oxley? Does anybody know? She went to Alderson Prison.
Recent or was it a while back?
She's out now.
Who was it? That the cooking lady? Martha Stewart?
Martha Stewart. Martha Stewart went to,
Sure
it's
did.
called Camp Cupcake, Alderson, West Virginia,
She a fella.
which is where I grew up, not in the prison, but close to Alderson.
3 hots in a cot, huh?
Okay. All right, let's do just a little review of chapter 1, and we're going to record this so that the online students can have it too.
Okay.
They were a little lost too, but they'll get it.
No problem.
We'll all get it, I
We'll
promise
charge
you. Just a review of how I want you to do your questions. The question is, what are the functions of accounting? The answer would be the accounting functions are da 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 da. I do not want you to write the question. I want you to incorporate the question in the answer. Notice that I want you to use complete sentences and correct grammar. Somebody posted on the discussion yesterday that they said we will do well in accounting. How do you spell do?
D-O.
D-U-E? No. D-O.
And they wrote D-U-E.
Well, due process.
Should have been do.
Due process.
So it
Checks and
gave me
balances.
what I needed to cover with my court reporting students with the do. D-E-W, D-O, and D-U-E. All right, accounting is a process. Here's the steps that we're going to cover. Analyze when we're looking at the source document, whether it's a check, a bill, an invoice, cash, whatever it is that we're doing. We're going to eventually record it in a journal. We recorded it in the expanded accounting equation. We're going to classify. Remember, what classification is it? Is it an asset, a liability, an owner's equity? We're going to summarize. Did it go up? Did it go down? What accounts were used? We're going to report it on the financial statements. And what financial statements did we cover last week? What's the first one that we prepare?
Balance sheet.
The first one.
Balance sheet.
The income
Income
statement.
statement.
Why do we have to do that one first?
Because that way it tells us if we're going up or down.
Okay, it gives us our net income or our net
Net
loss.
loss.
Which goes
The second
into
one we
equity,
do,
the owner's equity.
statement of owner's
Owner's
equity.
equity.
And statement of owner's equity, one of your questions was, what does it show?
Yeah.
It shows the ending capital, additional investments, the withdrawal. It shows whether we had a net loss. It shows whether we had a net income. And it gives us our ending capital or our new capital for the next fiscal period.
Can you also say what we're worth on that?
Oh, possibly.
I mean,
Is
I
that
know
what
it's not
you
the right.
answered it?
Well, I put it as what the
It's
owner
the
is.
new capital. It's the liability portion that the owner
Okay.
has in the company. Then we're going to interpret, and then we're going to communicate.
And that's my statement.
And when we communicate, we're going to share it with those people that are in the know that need to know.
How to know.
Right? Our accounting equation, it started off with assets equals the equities, but it's really assets equals what?
Liabilities, owner equity.
Liabilities plus the owner's equity.
Yeah.
That always has to be in balance. This is our goal forever, is to make sure that this equals. If we do something on the left side, we have to do the same thing on the right side. Now, some of our transactions,
What?
we did just something on the left side, on the asset side.
Capital.
What did we call that when a transaction just affected the left side? A shift in assets. And when we had cash and supplies, cash went down, supplies went up. And remember, when we buy something, we're putting it into the asset account. We're not going to use supplies expense until we get ready to make some adjustments, and that's several chapters from now. Right, there's the rights of the creditors, and this is the right of the owner or owners. Couldn't it be more than one?
Yes, you got
What's
three.
it called when it just has one owner?
Sole proprietorship,
And when it has more than one?
partnership,
And
or
then when it's owned by the stockholders?
corporation.
Okay, good. All right, here's the expanded accounting equation, and that's what your homework looked like. This is exactly like your test. You can use your highlighter if you want to either highlight the transaction or the totals. The expanded accounting equation lists the individual accounts that fall under each classification. So we have our liabilities, we have our owner's equity. When we want our two totals that go down here, left side and right side, we have to follow these. Revenue does what to capital? Up or down? Up. Expenses
Down.
make it go down. So we have a minus here and a plus here. Withdrawals do
Down.
what to capital?
Down, decrease.
They decrease. All the assets are added together. Assets are something of value. What's an example of an asset?
Land, parks,
Cash, office equipment.
cash.
Office equipment, cash.
computer.
What about those promises for our customers to pay us?
Accounts
Accounts
receivable.
receivable, okay. I think that's all on that one. And then I want you to put the plus or the minus in front of the entries. Did it go up? Did it go down? We briefly mentioned debit and credit on Thursday. Debit means what in double entry accounting?
Left side.
Left. Credit means
Right.
right. That's all. Doesn't mean increase or decrease. And I just want you to tell me, is the account going up or is the account going down when we record the transactions?
So,
I hope
So-
you use those.
Did we have to put plus on every entry, knowing that it was a plus, or just the
I wanted to see your plus and minus.
I only did it on the minus.
yeah, that's what I thought too.
Yeah.
I'd rather see it on both.
Okay.
I won't mark it off, but I'll probably write a comment to you. On the test, I'd like to see it on both, the plus
But then
or the
it's
minus.
so messy.
Because it's going to make a difference if we're plussing or minusing that account when we get into debit and credit.
And the only time you put in a dollar sign is when you're adding an amount.
You're not
At
putting a
each
dollar
row.
sign on this at all,
Okay.
except maybe the totals that go down here.
Only on the total.
Nowhere else, yeah.
Okay, so.
And remember, this is not anything you will ever see again after chapter 1 and after our test.
It's just an expense.
It's just a way to get comfortable with recording whether it goes up or whether it goes down when we have a transaction. And how we can see the left side of the accounting equation and the right, what's going to happen. This is just a tool. We'll never see it again, but you've got to get it right for the test, because that's what your test is going to look like.
So for transactions done, you don't have to put the dollar sign, or can you?
You don't need the dollar sign on
Because in
this.
the book, it seemed like that's the way they were doing it.
Did they put a dollar sign?
Yeah, there was
You
a
don't need a
transaction
dollar
done in the book.
At least on the
Every
first
time we
amount.
started, every first
Yeah.
entry, we put a dollar sign,
You
and
don't
that
need a
was
dollar
it.
sign, because this isn't anything that's official in accounting.
So the only dollar sign would be at the very bottom where you put
Right
the
here,
two
you're
double
gonna have to
lines.
draw those two lines.
That's the only
remember?
time you want to see a dollar sign. And
On the
that's
total.
If you put the dollar sign on, I'm not going to mark it wrong. Because this is just a tool,
okay.
okay? We're not gonna use this again. You will forget about it after you take the test.
Okay.
But it's a good way to be introduced to what happens to the accounting equation. That's one of the many reasons why I really like this book. And I don't have to jump around in the book. It goes in a nice order. Although he has some mistakes in the book, we'll look at the mistakes. So here's one of the transactions, and mine even has the dollar sign too, but you
Yes.
do not need the dollar sign. Label it, that was transaction A. What happened on that transaction?
Too much.
He invested in the company.
Yeah.
Initial investment, and that's usually the first transaction. Now, we don't have any totals on this one, but what happened on this one?
He bought
He
computer
bought
equipment
something
on account.
Okay. Okay.
So-
On account.
On
Just
account,
accounts
no
payable
cash
went
was
up.
involved. There we have a total, so they waited a little bit.
Okay.
And then we're just going to add it up. This is where I would like to see the dollar sign
Okay.
when you take the test. And I didn't give you the lines on the test. You have to put the lines in.
I see.
All right, let's just skip through those. We don't need to look at all of those.
Okay, you got some expenses?
So when you do new balance, you said put dollar signs or?
No,
No,
just the totals.
you don't need the dollar signs on there. I want you to know how to do this, but I don't want you to just get obsessed with this because it's just a tool. Here's the totals, I think, for that one. And you can see to get our numbers down here, we have to apply the
Oh, that's
plus
exercise.
and the minus there. It might have been our exercise.
Whenever they say they deducted for salaries, that's under expenses?
Expenses.
Okay, and how about, like, there was one where it says, just took out money to pay
Wait.
phone bill?
That would be.
That could be an expense for phone or
All
Be
right.
a negative
If
cash.
it's a personal phone bill,
withdrawal.
They didn't say company, it just said.
withdrawal.
Withdrawal. That
Has
means he
to go
takes
under
money
the
out of it.
withdrawal. If the owner takes money out for whatever reason, it has to go under here.
And if it's not, if it's a partnership or a corporation, he has to have an agreement beforehand
Right.
of
And
making
we
any
have-
withdrawals,
We
correct?
have two of these. We might have Ann Bell and Brian Bell. So we have Brian, and then we'd have Ann over here, and she'd have a capital account and a withdrawal account. Sometimes you'll see this WD, the withdrawal, called drawing,
Yes.
okay? Comma drawing, comma
They
capital.
draw out of
You're
the
talking
account.
about
Comma
the
withdrawal.
electric
This
bill,
book shows
Yeah.
withdrawal.
For personal, or for home
Yeah,
rent or
'cause
something like
it
that?
just said paid telephone bill 120, that was all it said, so that.
Okay, if we paid the telephone bill,
That
it's
would
an
be an
expense. Did we write a check?
It'd be
It
cash.
We
doesn't
paid
matter
for
what
it.
it
Cash.
is,
So
cash. It
cash
would
is-
still be cash.
It just
Cash
says.
would go down and
But if
expense
we
would go
paid
up.
the owner's personal
Or it
telephone
said
bill,
home.
it's
There's
withdrawal.
one that said home.
Yeah, 'cause this one just says paid telephone bill
Okay.
120. That's
So it would go
expenses.
under expenses.
So you
What
have
would the name of that expense
That
be
one's the
if we
withdrawal.
paid the phone?
phone, it could be cell phone expense
What-
or
Because it's
It might be, we might have a cell phone expense.
Communications.
We might have a landline
Is
expense.
that how you did it?
We could call it telephone expense. Okay, we haven't looked at chart of accounts yet. The chart of accounts will tell us specifically
Where to
the
place
name
it.
of those accounts, and that's the name we have to use. We're kind of guessing right now
right.
what it is. I don't want to look at any more of these. All right, here's the income statement. Remember on the test, I'm not giving you the heading. You have to put the heading in. But all of your working papers show the heading. So our heading is going to always be the company name, the financial statement, and then the date. The income statement is for a fiscal period. It could be month ended, year ended, week ended, day ended, whatever would be quarter ended. This one said for the month ended. How do we know that June 30th is the last day of June?
It's June on the past 30 days.
So it says.
Oh, okay, I'll have to do this so that everybody at home can see me too. All right, can you see my hand in
Yes,
the
ma'am.
camera? Okay, this is how you can always tell which months have 31 days. January, February, March, April, May, June, July, August, September, October, November, December. All of the ones up here have 31. January, February, March, April, May, June, July, August, September, October, November, December.
So the valleys have 30.
The valleys have 30,
Or 20.
or what does February have?
28, sometimes 29 on.
Now, this is with you forever. When you're sitting for the CPA exam,
Right.
you're calculating interest by day, and it's for 6 months. You need to know which months have 30 days and which ones have 31. That's with you all the time. Is my hand on there?
Yes.
Yes.
So.
January, February,
Knuckles are
March,
31.
April, May, June, July. July and August both have 31. July, August, September, October, November, December.
Good way.
This is with you forever. Who can remember that poem? 30 days has September, April, May. I don't know. I don't know the rest of it. I know I always have this. So that's a way to remember.
How many days there?
Yeah, you better not do that on the test. All right, let's look at the income statement. The income statement is going to show us whether we have a net income or a net loss. I don't know whether they have the double lines down here or not. I haven't clicked all the way down. But that should indicate that that's a total. Maybe, but if I click, I'm not sure it's going to the next slide. You have revenue. I would have put a colon right here.
Yes. Well, they did on operating expenses.
Mhm.
How come?
So there's a little problem there. I probably would have skipped a line right here.
Right.
Maybe skipped a line down here. You can make this look as pretty as you want, and you have lots of extra lines. Neat, straight lines, good-looking dollar signs. We only use the dollar sign on the top number in a column and a total. Now there should be a double line down here.
I got a question. How about when it says rent expenses due but unpaid?
Right? We've made a promise to pay.
That's accounts payable.
That's
On
usually
account.
accounts payable.
So that would be on my rent expense there, $500, even though I haven't paid it?
Mhm.
Okay.
We're going to record revenue and expenses when they incur, which means when they happen. And one of our concepts is to match revenue and expenses. Let's say we pay our rent 3 months ahead of time. We pay it for 3 months. We pay January, February, and March. In January, when we record it, it looks like we've paid 3 months worth of rent. Later on, we're going to make an adjustment so that it looks like we just paid for 1 month's rent. If we pay 3 months rent in January, then what happens to our profits in January?
They go down.
Are they accurate?
No.
No,
They're
no.
not. So we want to record it when we pay it, but we have some other transactions that we have to do to match it with the month. We just made a promise to pay. Was it rent or what was it? Rent expense, and we just promised to pay this, but we know in the month of June that our rent was $500. We haven't paid it yet, but we want to record it for the month. Matching revenue and expenses, that's one of your concepts. Did you look at that list that I gave you? If you haven't, look at that. This book doesn't always point out which concept we're using, but matching revenue and expenses is what we'll always try to do. Oh, there's the double line. It was on the next one. There's our net income. Now, when revenue is greater than expenses, revenue greater than expenses, what do we have?
Net income.
Expenses greater than revenue.
Net loss.
And net
Net
loss.
loss. All right, here's the statement of owner's equity. Again, the heading is the same. The name of the company, the name of the statement, and the date. The statement of owner's equity is for the month. Here's what we started with. We had a net income, we had a withdrawal. What did we do to this one?
Subtracted.
We subtracted. Sometimes when we have a negative number, you'll see it in parentheses or in red. But we subtracted here. This is the subtotal for
Of those
this.
And then you add them
And
together.
then we had an increase in capital even though we had the withdrawal there because we had a net income. And here's our ending capital. This number is the one that we have to put on the next statement. What is the last statement that we have to do?
Balance sheet. Balance sheet.
The balance sheet has a specific date. It's a snapshot of what the company looks like on a particular day. right? So on June the 30th, this is what the balance sheet looked like. Whatever time we did it, if we did it at 9 o'clock in the morning, at 11 o'clock, it might be different because we've had some other transactions. And we usually divide it up like the accounting equation. So we have the assets on the left, liabilities and owner's equity on the right. The number that probably threw some of you off is this number, because this has to come from the statement of owner's equity. What accounts go on the income statement? What was the mnemonic that I gave you?
Revenues and expense.
Income statement. Income statement. ICE. They're temporary accounts. We're going to close them eventually. ICE, what are they? Come on, I know you know that. What was my silly picture? The ice cube. All right, balance sheet accounts. What accounts go on the balance sheet? The out. Assets, liability, and proprietorship, which is capital, owner's equity. They don't ever change. Memorize that, because when we take the test and you have assets on the income statement, I know you didn't use my mnemonic. Income statement, ICE, income, cost, expense. Balance sheet, out, assets, liability, proprietorship. And in chapter 1, I think I had the picture of the mnemonic in the PowerPoint. Questions about chapter 1? No questions.